Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to show you how I trade options during earnings. Now, if you're new to options trading or you're trying to use options in order to supplement your regular 9 to 5, you so happen to jump onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's option strategy, I'm going to show you a single option strategy that I use in order to keep growing my portfolio in addition to all the strategies I feature on this channel. So you guys know how we do it. Let's go ahead and get down and dirty with options. For today's option strategy, we're going to be using none other than the Spider ETF, ticker SPY. So let's go ahead now to go trade SPY options down to the bottom in order for us to open up the option chain. So what is the option chain? The option chain is this right here, and what that does is that gives us enough information in order for us to make a very informed decision. Now, this option strategy is a bit intense and it might not be if you just start in options. However, this option strategy can be used on any stock during its earnings season. It will work probably like 90% of the time. So without further ado, let's go ahead and use the SPY. So for the first leg of this option strategy, we're going to jump over and we're going to go to sell and we're going to go to call. Now we're going to go ahead and choose our strike date. Just for the purposes of this video, I'm going to use the strike date of January 17th. So as you guys know, on this channel, we specialize on growing small portfolios. So with the January 17th date, you don't have to choose that. Feel free to use any date. The reason I'm using the SPY ETF is because the SPY is extremely consistent. So during earnings, you have AMD, you have Tesla, all these stocks fluctuate up and down in any direction. You could play the guessing game or you could implement this strategy. So now that we have sell and we have call, now we're going to go ahead and choose our strike price above the current share price. Now I'm going to make sure this option strategy is extremely conservative as humanly possible with still making a decent premium. So with that, we're going to go ahead and we're going to choose a very high chance of profitability. We're going to be going with a 91% chance of profitability. You know what? Let's go a little less conservative. Let's go with the 89% chance of profitability. That's as close to 90 as well. Now, with the 89% chance of profitability, that's going to give us a strike price of $5.95. So in addition to my almost 90% chance of profitability and the $5.95 strike price, I will be paid for doing this option strategy. On this channel, we feature option strategies that once we implement them, we receive a credit right away, and that's how we grow our portfolio consistently. So for this option strategy, we're going to be paid 0.58 or 58 cents. As you well know, each option contract is multiplied by 100 shares. So in real life, we will be receiving $58 for this. Now, how did I come up with $58? Well, it's going to be 0.58 multiplied by 100 shares. The result is going to be $58. Let's go ahead and select that. So this first leg of this option strategy is none other than the covered call option strategy. Now we're going to go ahead, we're going to jump over to buy and call while maintaining the exact same strike date. Now we're going to go ahead and choose a second strike price, and that's going to be right above our sell call. We're going to be going with the 596 strike price. Now, with the 596 strike price, now we're going to be buying a call. And since we're buying, we're going to have to pay some kind of money. That kind of money is going to be 46 cents. Once again, 0.46 multiplied by 100 shares. Now, once you go ahead and you select this, we get an entirely different option strategy known as the call credit spread. But hold up. It does not end there. This is one of the most exciting option strategies there is, yet still, it's one of the most conservative option strategies. So now we're going to go ahead, we're going to go to sell, we're going to go to put, and once again, we're going to maintain our exact same strike date. This time, we're going to go below the strike price and we're going to do exactly same chance of profitability as we did for the top side of this option. So we're going to be looking for an almost 90% chance of profitability. So with that, we're going to be getting the 568 strike price. We're going to go ahead, we're going to click into that. And once again, we're selling, we're going to pick up another premium. Good. Now we're going to jump over to buy and put once again. And remember, we need to maintain the exact same strike date. And this time we're going to be choosing our secondary strike price below our previously sell put, which is going to give us the 567. Now this is a buy call. Now we're going to have to pay something, and that's going to be 0.64 cents. We're going to go ahead and click into that. So one of the best option strategies to use during earnings season is going to be the short iron condor. What the short iron condor allows you to do is that it allows you to capture price movement. If the price were to go up or the price were to go down, we're not going to be chasing price action. What we're going to do, we're going to lock in our profits between certain price range. The price range we're going to lock it in is going to be 567, and on the top side, 595. Once the SPY stays anywhere between these two strike prices, we're gonna make a premium. Now, as soon as you do this option strategy, you will receive a premium. The premium you're going to be receiving is going to be 22.84. In addition to getting the premium right away, this option strategy will require you to leave a collateral. The collateral you're going to leave is going to be $100. Now, here is the kicker. Here is what makes this one of the best option strategies if you trade with a small account. So because we do this option strategy, we're going to look at the percentage return on this option. So what we're going to do now, we're going to divide, let's round it off to $23. We're going to divide 23 by 100, and that's going to give us 23% return once the strategy works out in our favor. Now, there's a 90% chance this strategy works out in our favor. And the reason it's 90% chance, we did choose the 90% chance of profitability. However, each option strategy comes with risk. The risk of this strategy is that there's also a 10% chance that this trade could go against you. A 10% chance I can live with. So always do your own due diligence before investing, and always have an exit strategy before entering any trade. So with a 23% gain on you could do this on a daily basis or every 2 days. This is going to allow you to grow your portfolio. Now, what are the odds of the SPY ETF going to 595 in 3 days or going down to 567 in 3 days? Well, that is a trick question, because the answer to that, there's an absolute 10% chance only. And this is how you trade during earnings, by using the iron condor option strategy that gives you high percentage returns, and you're able to use this option strategy if you're trading with a small portfolio. Now, if you guys got any value from this video and you want to become part of the consistent income team, then all you have to do is just 3 things. Firstly, go ahead, like the video if you haven't done so by now. Next, you're going to want to subscribe to the channel in order to get a video whenever I post it. Thirdly, hit the alert bell. Once I drop this video, it's going to pop up on your phone. That makes everyone happy, and that's the best way to help out the channel. But in addition to that, there's one thing you could do for other people that's trying to grow a small account, and that is share the video with them. Now, if you guys have any questions concerning the iron condor option strategy, let me know in the comments below. And if you guys are interested in joining the consistent weekly income team, then check out the first link in the description. And until earnings season is over, push your investments.